Hello, you're watching Proactive London. I'm joined by Bill Hocking, the CEO of Galliford Try. Bill, great to speak with you this morning. Can you give us an introduction to Galliford Try for those who may not already know you?
Yeah, sure, Steve. We're a well-capitalized, debt-free national construction company. We operate across the UK, building critical national economic and social infrastructure, predominantly for public sector and regulated clients. About 90% of our work is in the public and regulated sectors, which means really that we're not a cyclical business at all.
Bill, today's trading update seems very positive. Strong cash, a £3.8 billion order book, and you've increased guidance for the full year. What more can you tell us?
Yes, Steve, we've continued to make really good progress against our strategic targets with increased revenue and profit before tax, as we said earlier on in our statement. We've got a really strong balance sheet. We had £227 million of cash on the books at the end of the financial year, and that was an average month-end cash balance of around £155 million. We're really confident in the outlook for the business. We've got a £3.8 billion order book, and that's all high-quality work we can look forward to. And we're coming to this financial year for full year 25 with 92% of revenue already in hand. And actually, just as importantly, or more importantly, we've already got 60% of full year 2026's work already in hand. So it's a really strong order book position. All parts of the business are in really good shape and are performing strongly, and we've won some good work through frameworks recently. The most notable recently being the £3.2 billion communities and investment framework. And that's important for us because we've re-entered the affordable housing market recently as part of our strategy to 2030, as we announced at the Capital Markets event. We've also made 4 good acquisitions over the last couple of years, all of them in water, and that was actually in anticipation of what we've seen happening in water, which is a huge increase in opportunities in construction in the water industry.
You mentioned the Capital Markets event, Bill, and May you set out the group's sustainable growth strategy to 2030, building further on the strong operational and financial performance delivered since 2021. Can you remind us of your updated targets?
Yeah, Steve, what happened was we had targets of £1.6 billion and 3% operating margin through to 2026. And actually, we were already bumping up against some of those targets. So we looked further out to 2030 and set in place a new strategy which aims to achieve revenues in excess of £2.2 billion at 4% operating margin in 2030. And we do this while we maintain a really strong discipline about project selection and client selection and so on. So we increasing that focus on margin through growing both the core parts of our business, the big framework operations, mainly in building, water and infrastructure, and then we're augmenting those margins through our specialist businesses and, as I said, a new entry or re-entry into the affordable homes market. So we were in the affordable homes market prior to selling the house building businesses back in 2020. That restrictive covenant post that sale has now expired, so we can re-enter that market. And as you've read everywhere, Steve, it's a big market and a good market, I think, in the future.
You've upgraded expectations again for 2024 today, Bill. So, of course, we've just had a Labour government voted in after 14 years of its Conservative government. How do you see Labour policy impacting Galliford Try?
Well, before the election, Steve, we were pretty agnostic about who won it. Typically, historically, Labour have been better for construction than Conservative governments. They do, historically invest more in the infrastructure of this country. So in terms of that, I think it's going to be good for the construction industry generally, and of course, therefore, for Galliford Try. It was good that the election was quite quick and it's over, and we now have some stability. And I think it's important to note that, as I said earlier on, the fact that we've got such a high proportion of our work already in hand means that any hiatus while the new government finds its feet won't impact us. I think that's really important.
Bill, finally, can you summarize the investment case for the business?
Yeah, Steve, we've got a very simple philosophy. We start with a core of really good people, 4,200 really good people. And then we put robust processes and a good, healthy culture around that, and a very focused attitude to risk and selectivity about what we do and what we don't do. And that leads to this high quality order book, an order book that we can do day in and day out. And that consistency of performance drops to the bottom line and sustains and grows our really strong balance sheet, and so the wheel turns. So I think that's really important. We're encouraged by the performance of the business. We've got a really good dividend policy of 1.8 times cover, and that's actually 2 times cover on normal earnings and 1 times cover or full cover on interest earned through our PFI or PPP interest. So we've demonstrated over the last 4 years a consistent increase in performance, and we believe that our strategy through to 2030 and the markets we see in front of us sustain that, and we're confident of achieving those targets.
Well, Bill, I hope you'll keep us posted on any progress. Thank you very much for speaking with us today.
Thank you, Steve.
Bill Hocking is CEO of Galliford Try.